It's highly debatable if Nigeria has really taken enough advantage of America's highly popular African Growth and Opportunities Act. Since the law's inception in 2000, Nigeria has exported an estimated $277 billion worth of goods to the United States under the program. That's according to data from the Nigeria Bureau of Statistics. But the flip side is that over 90% of the exports are crude oil. Non-oil exports are almost negligible. In 2023, for example, Nigerian exports under AGOA were put at $3.8 billion. And of that figure, crude oil alone accounted for some $3.6 billion. Analysts say even with the 14% reciprocal tariff, Nigerian exports to the U.S. are not likely to be adversely impacted, given the nature of its exports.
Now, in the statement issued by the U.S. government concerning this Trump tariff, it was made clear that energy products are exempted from the tariff. So to the extent that energy products have been exempted from the Trump tariff issue, then we are not as vulnerable, as many other countries that are exporting non-oil products.
Nigeria has also rapidly expanded its oil export market. In 2024, most of Nigeria's oil and gas exports went to Europe. Exports to the U.S. market are expected to continue to decline as President Trump pushes to raise oil production at home. But Washington's 14% tariff could seriously impact Nigeria's non-oil exports. The United States accounts for 7% of Nigeria's non-oil exports. Local manufacturers say if AGOA is ended and the 14% tariff stays, it will adversely undercut the competitiveness of Nigerian goods in the U.S. market and discourage value addition in local manufacturing.
For all practical purposes, we can regard the AGOA as dead. No matter how we look at it, this development is a wake-up call for Nigeria and many other African countries to see how we can diversify our exports portfolio geographically so that we are not vulnerable to this kind of shocks. And this is also an opportunity for us to accelerate the pace of development of the African continental free trade area, so that because so far the pace has been very slow.
I'm positive that because of the bipartisan, partnership in the U.S. Congress over exports from Africa under the AGOA scheme, I'm very hopeful that the relations will be normalized in that area so that we continue to enjoy the benefits of the AGOA scheme for duty-free access into the U.S. market. So I don't think, essentially, yes, it is a risk, but let us not totally say AGOA is dead. I don't think so. So we'll see what happens by September when the act is due for renewal.
Many trade experts here have said what they worry more about is the global impact of the Trump tariff, warning that the Nigerian economy could be severely impacted. And we're beginning to see a sign of that. The fall in the global price of oil, for instance, is giving managers of the Nigerian economy serious cause for concern that it could disrupt the country's national budget and pile more pressure on the local currency. Deji Badimasi, CGTN, Lagos, Nigeria.